It's Tuesday, the 22nd of June. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, in the chair for Sean Aylmer. Barnaby Joyce is back as National Party leader and Deputy PM in a move that will have big implications for government policy making. That's our main story. Also coming up in today's podcast, the ASX tumbles, delivering its worst result in 5 weeks. Commonwealth Bank completes its 3-year cleanup with a $1 billion sale. And the price of mobile phone plans rise after a major telco merger. After the podcast, stay listening for an interview with angel investor Rachel Newman. But first, here's a brief look at markets. US markets have had a strong Monday so far, with the Dow Jones up 1.7%, S&P 500 up 1.3%, and the Nasdaq up 0.6%. At this rate, the market could end up having its best day since March. It's recovering many of the losses from last week, which came after the Federal Reserve indicated interest rates would likely rise earlier than expected. European markets have also had a good day, with London's FTSE 100 up 0.6% and the Stoxx 600 index ending 0.7% higher on its best day in nearly 3 weeks. Locally though, Australian shares suffered their worst day in 5 weeks yesterday, following the poor lead-in from Wall Street over the weekend. The S&P ASX 200 index fell 1.8%, spooked by the same fears of inflation and rising interest rates that helped send Wall Street down last week. Commonwealth Bank was the biggest drag on the market, down 5.5% after announcing the staggered sale of its general insurance business. More on that one later. Financials, utilities, energy, industrials and materials were all down. Afterpay was up 2.5%, while Boral gained 1.3% and was above $7 a share for a time after the sale of its US building products business. Gold is up slightly to $1,784 an ounce. The price of oil is up as well, trading at around $77.5 a barrel, and the Australian dollar is buying 75.4 US cents. Barnaby Joyce has rolled Michael McCormack as leader of the National Party in a move that threatens to sharpen divisions within the coalition over climate policy. Mr Joyce is expected to return to cabinet for the first time since early 2018, probably at the expense of McCormack, with several other climate skeptics in the Nationals' ranks expected to be promoted. Joyce was dumped from the leadership in February 2018 amid allegations of sexual harassment, which he denied, and following revelations he'd had an affair and fathered a child with a former staffer. He's been plotting his return ever since, and pounced on growing disaffection about McCormack's lack of presence and his faltering performance in Parliament last week while Scott Morrison was a guest of the G7 meeting in the UK. During his exile, and under the leadership of Scott Morrison as Prime Minister, the coalition has been creeping slowly towards a commitment to net zero carbon emissions by 2050, which would bring Australia into line with a growing number of Western economies. But that spells bad news for coal and other primary industries in the regions that the Nationals represent, and some in the party room flip their support to Joyce because they want a leader to argue more forcefully for regional interests. For his part, McCormack says it wasn't a personality issue, so much as some Nationals just wanting their old ministerial jobs back. Former Resources Minister and coal-fired power advocate Matt Canavan moved the spill motion, while Victorian Senator Bridget McKenzie, who you'll remember was dumped from the ministry last year over the sports rorts affair, is expected to be returned to cabinet alongside Joyce. She went on a tear last week advocating against a move to net zero emissions. Meanwhile, the federal coalition is still at odds with some of its state counterparts. Yesterday, Sean mentioned that the New South Wales Liberal government announced rebates to encourage the purchase of electric vehicles as part of today's state budget. It also said it'll defer road user charges that apply to petrol vehicles through fuel excise until 2027. Now, I don't know about you, but I reckon Barnaby Joyce's return has all the makings of a giant headache for Scott Morrison. The last thing he needs is a battle with his coalition partners over climate policy, especially when the focus needs to be on the vaccine rollout and economic recovery, not to mention when they're in the run-up to an election. Opposition leader Anthony Albanese probably can't wipe the smile off his face. In a moment, the rest of the news you need to know this morning. In overseas news, COVID-19 deaths in the United States have dropped below 300 a day for the first time since March last year, in a sign of the improving conditions in the country. But apparently, demand for vaccinations has slumped somewhat as the US approaches a milestone, 150 million people fully vaccinated. Meanwhile, Canada has declared they won't fully reopen their border until 75% of Canadians are fully vaccinated. Closer to home, Indonesia has now hit 2 million COVID-19 cases, with that country still refusing calls for a national lockdown. And in New Zealand, the government is considering extending the vaccine to 12 to 15-year-olds. Legendary filmmaker Steven Spielberg, who's directed some of the most successful films in history, has signed a production deal with streaming service Netflix. Spielberg's company will provide multiple new movies each year in a major coup for Netflix. And in China, a crackdown on cryptocurrency mining has seen a ban on mining in the southwestern province of Sichuan. Put simply, mining cryptocurrency like Bitcoin involves processing huge numbers of online transactions, earning the miner, in the case of Bitcoin, a fraction of a coin. Anyway, authorities in China ordered the closure of 26 mines last week and have instructed power companies to stop supplying power to them. Trading of cryptocurrencies has been banned in China since 2017, but Chinese mines power nearly 80% of global trade in the digital tokens, and Sichuan is one of the largest bases. The Crypto 10 index of leading tokens is down 26% this year. Locally, New South Wales Premier Gladys Berejiklian has warned that restrictions announced over the weekend are likely to be extended after the so-called Bondi cluster of local COVID-19 infections grew by 2 cases to 11. Masks are mandatory on public transport across the Greater Sydney area through to the Blue Mountains, Wollongong and Shell Harbour, as well as at indoor gatherings in 7 local government areas, including the Sydney CBD. Health authorities have added a number of bus routes to the list of potential exposure sites. As I mentioned earlier, Commonwealth Bank has announced the sale of its general insurance business to South Africa's Hollard Group for about $1 billion. Hollard beat out local competitors Suncorp and IAG in a deal that will deliver $625 million upfront and deferred and ongoing payments as part of a 15-year strategic alliance. The sale ends a 3-year cleanup by Chief Executive Matt Comyn that leaves CBA as a focused retail and business bank. Australia's biggest lender now has a growing pile of surplus capital and franking credits on its balance sheet, and investors will be looking to the annual results in August for some of that to be returned through buybacks and other measures. Boral Group has sold its US building products business for $2.9 billion, unwinding an expansion that ultimately cost Chief Executive Mike Cain his job. Cain's successor, Zlatko Todorchevsky, announced the sale as Boral continues to defend itself against a takeover from Kerry Stokes' Seven Group. Boral bought the then Headwaters business for $3.5 billion in 2016, funded by a $2.1 billion capital raising, but was then hit by a series of profit downgrades. Boral shares jumped above $7 yesterday, the first time since 2018 on news of the sale. But Seven Group, Boral's biggest shareholder, said the sale had been rushed and crystallised a loss. Seven has extended a bid at $6.50 a share to lift its holding above 24% by a week, but is unlikely to pick up more shares at that price. Instead, its shareholding will increase as other investors sell into a buyback launched by Boral. Mobile phone customers are paying between 5 and 15% more for their service from the big 3 providers since the merger of TPG Telecom and Vodafone Hutchison, according to the Australian Competition and Consumer Commission. The $15 billion merger was opposed by the ACCC but went ahead after a court challenge. Competition boss Rod Sims says customers now have a choice of 3 lookalike telcos who account for 90% of the market, raise prices in lockstep and don't compete on price. The cost for postpaid customers are up between 5 and 15%, while prepaid customers have got more data but shorter expiry times, meaning they top up 3 times more in a year. The ACCC findings come as Vocus announced it had cleared all the regulatory hurdles to be acquired by Aware Super and Macquarie Infrastructure and Real Assets for $3.5 billion. Property group Stockland's new boss, Tarun Gupta, says the COVID pandemic has changed the types of houses people want to buy. With more people working from home, people are choosing to buy bigger homes, and that means moving further out. In an interview with the Australian Financial Review, Mr. Gupta says around a fifth of its customers who previously looked to buy in inner and middle rings of the cities are moving further out to get a bit more space. Meanwhile, Vicinity Centres has taken the knife to its valuation of Australia's biggest shopping centre, Chadstone, in suburban Melbourne. Vicinity slashed $64 million from the value of its half share of Chadstone to just over $3 billion, blaming changes to shopping habits because of the COVID pandemic and stamp duty and land tax increases by the Victorian government. AUSTRAC, the agency that monitors money transfers and fined Commonwealth Bank and Westpac $2 billion for breaches of anti-money laundering and counter-terrorism financing laws, is facing calls for greater scrutiny of its own actions. Labor backbenchers are pushing for AUSTRAC and the money laundering regime to be referred to a Senate committee after the agency was handed an extra $100 million in the federal budget and its remit expanded from 15,000 businesses to 100,000 businesses. AUSTRAC's approach has been questioned after its 2017 review found casinos were meeting their reporting obligations, only to be contradicted strongly by a New South Wales inquiry into Crown Casino that found widespread breaches. Dennis Hanlon, CEO of Sony Music Australia, has abruptly left the company after 37 years in charge. The decision to bring in new leadership comes as a global head office investigation into workplace culture at the Australian music label continues. And university students coped with lockdown in 2020 by sharply increasing their use of buy now, pay later services like Afterpay and adult sites like OnlyFans, according to a study of their debit cards. Results from anonymised data of 40,000 students' cards collated by university platform QPay show spending via Afterpay, most often used on clothing, rose threefold, while the subscription site OnlyFans saw a 129% rise, perhaps revealing how some students coped with the loneliness of lockdown. Recurring subscriptions like Netflix rose 29%, and food delivery jumped by almost half. Purchases of cryptocurrency rose 23% and peaked in November before falling sharply. Stick around because up next in the Fear and Greed playlist is our daily interview. Today we're talking to Rachel Newman, an experienced startup investor and the co-founder of Flying Fox, a venture capital fund launching today. Sean Aylmer talked to her about what it means to be an angel investor and what a young company needs to do to grab her attention. It's a great chat. It's up next in the playlist or at fearandgreed.com.au. It's Tuesday the 22nd of June 2021. I'm Michael Thompson, in for Sean Aylmer, and that was Fear and Greed. Enjoy your day.